Reginald Angus. I'm in Toronto still, and I'm visiting with a gentleman right now that I greatly admire because my attitude is there's no greater opportunity bestowed upon the Canadian people than being elected to lead the people. And the gentleman I'm about to interview is a perfect example of someone who's put the people first. And I'd now like to introduce Mr. Turner, Garth Turner.
Hi.
Thank you so much, Garth.
My pleasure.
Well, I'm beyond doubt. I mean, you've been an author, you've been a politician, you're a financial consultant now, you're writing blogs. You are a perfect, I would like to see an awful lot of Canadians be just like you, because you're standing up for trying to keep Canada going, trying to, you're helping the children, you're giving them hope for a future. And what I wanted to talk about, being from Vancouver, you've written blogs on the housing crisis in Vancouver right now and how there's an artificial bubble. Could you talk a little bit about that?
Well, Vancouver is a very dangerous place to live right now. People have adopted a mentality that there's somehow special in Vancouver, that there's a certain premium for living there, and it's a great place to live, and there always has been a premium of 10 or 15% in terms of cost to live in Vancouver, but now it's 100% premium, and it's way beyond anything that's rational. It's hurting individuals. Individual families can no longer afford to buy average homes in Vancouver. It's changing the social fabric of the place. It's just a very destructive force at the moment. I look at what has happened in Vancouver, and I see a rerun of what happened in Phoenix and Vegas and Miami, Boston, Chicago, Seattle in the United States, where people also said it's different here, we're special, the rules of economics don't apply anymore, and at the end of the day it all ended the same way. So I think people in Vancouver are being set up for a very large disappointment.
Well, in one of your blogs, you actually mentioned the sister city of in the United States to Vancouver would be Tampa Bay. Could you talk a little bit about what you mentioned in your blog?
Well, real estate values in cities like that have come down 40 to 60%. And the real victims of this have not been the banks or the mortgage brokers. They've been individual families who owned these assets called homes. And they put the bulk of their net worth into them. And to see the value of that eroded actually destroys middle class wealth. The problem with that, and you may say, well, I have no sympathy for people who own their homes. Well, you should have sympathy, because most people get sucked into this mentality that they have to have a home and they have to own it. But secondly, when middle class families become far too indebted and don't have the cash to carry or maintain their homes, they stop spending. They don't spend as much on groceries or buying a new iPod or whatever. And that ends up hurting the whole economy. 65% of the economy of Canada is dependent on consumer spending. So when consumers spend less, we have fewer jobs. And when we have fewer jobs, commodity prices go down, car factories close, the Best Buy at the local mall goes out of business. All of these things happen in a cascading way. So real estate is very much at the center of this economic reality we built, which is why I read about it so much. It's just, we've all swallowed the Kool-Aid that for some reason this asset is going to go up forever. Well, nothing goes up forever.
When I was in the military, I remember about 95, when I was just starting to get out, I was talking to a gentleman, and at that time he told me how he bought a house in Vancouver. And it was about $450,000 he paid for it in the early 90s. And what amazes me is now we're talking the average single detached house is about 1.2, what you were mentioning, also 700,000 for the whole of the housing market, which you also mentioned to me earlier. I just can't believe how much has gone up. Now, the main question is when this artificial bubble bursts in Vancouver, and everyone knows it's going to burst because you have your speculators coming in from Asia and other areas of the earth sort of thing. What's going to happen is all this $750,000 average price, it's going to shoot down. Like, how much do you actually see it going downwards? Do you see it 10%, 20, 30, or even the Tampa Bay area, 46%.
Well, we don't know that for sure because the factors that will ultimately influence that, whether it's higher interest rates or falling commodity prices or some crisis in Asia or a stock market wobbling, we don't know what the issues are going to be. Greece defaulting, we don't know.
And also Spain having problems, Italy having problems.
Italy, Portugal, Ireland, Britain, United States, we don't know. It could be probably severe. And by severe, I think anything more than 15 to 20% in Vancouver will be severe. Why? Because people are so stretched out financially that a 20% drop means that so many people all of a sudden are underwater. They owe more money than they own in their homes. That's a crisis. So even at 20%, it's a crisis. Now, I do think there will be a correction, but that's not the end of it. I think there could be years where we have an erosion in values. This is what's happened in most industrialized countries.
Yeah.
They don't just have a big, 2 weeks it's over with, right? We have new pricing, move on. In the United States now, we're in year number 6, where we haven't even hit the bottom yet. So prices now have gone down 8.5% from where they were last year. And that is 30% from where they were in 2006. So that's the real problem. And people cannot survive multiple years of a decline, right? So this is what I think is probably in the cards for Canada. And it's not even on the radar of most families.
So when we're talking about what would you suggest for the people that now own houses in the Vancouver area? Would you suggest, possibly looking into sort of trying to offload it on the market at this time and take a little tiny loss, or holding on to it and trying to hold on for 10 to 20 years for it to be back on the upspring sort of thing?
If people in Vancouver have owned their home for a few years, they probably made a substantial capital gain on what they purchased it for. Why on earth would they not sell at the top? Human nature being what it is, when things go up, people want them. Man, I gotta have that thing, right? It's so popular and valuable. When things go down, people bail. We see this all the time in the stock market. When stocks go up, people buy in. When markets crash, I gotta get out, right? So back in 2008, when the stock market crashed in the financial crisis, people could not wait to get the hell out of that thing, okay? They sold at the bottom. I bet what's gonna happen in the Vancouver market, as prices go up, listings come down because people are saying, oh, my house is so valuable, why would I sell it, right? And when the market starts to go down, they'll bail, and that accelerates the decline. So people who have made a capital gain and they're smart, get out now and crystallize the gain. Go invest it. Wait for the market to go down, buy back in at a lower price. That makes a lot of sense.
Do you see the Bank of Canada rate going up anywhere, and also the Charter Bank?
Yep.
Because they recently just upped it, I think, to 5.54%. Do you see it going up to possibly 6% or 7%?
There are two things about mortgages: long-term mortgages and short-term mortgages. Short-term mortgage rates, we usually call them variable rates. That's what's been the most popular. They go up and down with the Bank of Canada rate. The Bank of Canada has kept rates low now for 3 years because we're in an emergency situation to keep the economy, hopefully to rescue it, okay? Now that inflation is going up and we're 3 years past the crisis, those rates will be rising. They will rise substantially, but over the course of probably 3 years. Long-term rates are set by the bond market.
Yeah.
That's how, so a 5-year mortgage rate, for example, set by bond yields, not the Bank of Canada. What's happening with bond yields right now? Well, as the stock market goes down, bond yields go up because people want more yield. If Greece defaults, Ireland, Portugal, Spain, Italy, any of these things, the United States gets into more of a credit crisis, guess where interest rates go? Up, because risk goes up. Investors demand more return for more risk. That will influence long-term mortgage rates. I think over the course of the next 2 years, there is nowhere for interest rates to go but up. Unless we have another recurrence of an economic crisis, in which case rates will stay low. But that's bad too, right? So either way, home ownership right now is a very dangerous proposition.
So even people with credit cards and other types of credit, once the interest rates go up, they're going to be having less money to spend from their pocket and be strapped for cash. So we could actually look at another recession happening with the interest rates going up by 1 to 2%. That could drive us right back into the recession.
It's possible. We're very close to recession every day now. You just take a look around the world. There are so many issues right now. Take a look, even the Japanese earthquake and tsunami, the third largest economy in the world, decimated. We're just starting to see the impact of that 6 months later. So it's a very dangerous time.
So are there any last words you'd like to share? Because I know you're very pressed for time with the people in Vancouver. Any suggestions you'd like to leave in their minds? I mean, your blog, beyond doubt, you're hitting it on every level. And I love reading it because you told the Vancouver people, here it is. You are being forewarned about stuff, so don't come afterwards and say, no one warned me, because beyond doubt, Mr. Turner, you have warned people.
Well, I think you pretty much hit it there. It is a time that is fraught with risk. People who think that somehow they're immune from that or divorced from it are just not paying attention. So I think the more that we can, although people listen to me or not, and I haven't as many people calling me an idiot as anything else, which is fine. I can live with that. Prime Minister, I'm in good company, right? Call me an idiot. But I do think at the end of the day that prudence right now is a really good thing to have. And I think caution, it doesn't need to mean you go around being afraid of the future. The future will be fine. It'll look after itself. But I think right now that people need to make sure that they're very much in the real world and understand that risks that swirl around us don't just happen to other people.
Well, thank you so much for agreeing to this time there, Mr. Turner. In closing, could you leave everyone with your blog address so that way people can check it out?
Yeah, well, the blog is simple. It's called greaterfool.ca. Every day is a new adventure.
That's so true. Well, thank you so much again, Mr. Turner.
Pleasure.
It's coming from Toronto, and I look forward to the next guest that we're going to have on. Thank you so much, people.